Tesla just barely reported its highly anticipated quarterly result for Q2 of this year. And trust me when I say there's a lot to talk about. Between the actual earnings results, Tesla selling 75% of its Bitcoin stake, as well as some exciting guidance that we got on the earnings call from Elon himself. So make sure you stick around to the very end of this video if you want to know exactly what to expect going forward with Tesla stock. And as a bonus, at the end of this video, I will also be updating my end of year price target for Tesla. So to start off, I want to hurry and sum up for you guys exactly what the earnings results were. And then after that, we're going to get into the actual juicy, meaty part of this video, which is the actual guidance and what was said on the earnings call. But to sum up the results, revenue was a beat at $16.9 billion. EPS was a beat at $2.27 a share, or $1.95 diluted. Net income came in at $2.259 billion, or a 13.4% net income margin. Auto margins came in at 27.9%, which is a shrink from 32.9% in the quarter prior. Gross margin still came in at 25%. Solar and services gross margin came in at 6.6, which is actually a record for that segment. And on top of all of this, assets have now increased to where current assets could totally cover total liabilities. So now with all that out of the way, let's go into the actual good stuff, the guidance, what we heard on the earnings call, all the stuff that you actually clicked on this video for. So first thing to mention was that Elon Musk was actually on the call today, to many people's surprise, and he actually had a couple of opening statements to begin the call with. First thing that Elon actually told us was that we achieved record production at both the Shanghai and Fremont Gigafactory in June, so that was really good information to hear. And then on top of that, he also mentioned that we are starting to see 1,000 cars per week come out of Berlin, and soon we're going to be seeing the same thing happen at the Texas Gigafactory in Austin. On top of this, he did also mention that they did see some signs of supply chains starting to ease, especially in the form of semiconductors and other materials, but at the same time, he did mention that their energy sector, especially in the energy storage business for their power walls and actually like battery packs to store energy, that was still very much so constrained by supply chains. We also did find out on top of this when Andre left, which was the FSD lead over at Tesla, that they did come to a grinding halt due to the fact that Andre was doing all the coding himself actually. So he did say that that was a little bit of a challenge when Andre decided to leave, but they left on good terms, so it wasn't any hard feelings. But nevertheless, he still expressed in full Elon Musk fashion that he expects full self-driving to still be solved by the end of this year. With all this, Elon does say that he still expects us to have a record second half of this year, which is extremely bullish if you ask me, and especially when he is reiterating that he does expect us to be able to achieve our 50% year-over-year growth rates on deliveries. After this, Elon as well as Zach started to talk a little bit about these cash furnaces that are known as our ramping up gigafactories over in Austin and Berlin, which earlier on in the quarter we did hear that, they were literally cash furnaces burning billions and billions of dollars. Well, today on the earnings call, he told us that these cash furnaces are actually starting to have their costs go down, which is a great thing. And they said that we can continue to expect this going forward as ramping continues. On the topic of ramping, when we actually go into the investor slide deck and take a look at what they have for their installed production capacity for their vehicles, we now sit at 1.9 million vehicles per year. So with this being on the shareholder slide deck, we actually wound up hearing one of the analysts ask this question later on the earnings call of how fast they might be able to actually use that full 1.9 million production capacity. And to answer this, they actually told us that they plan to exit 2022 while being able to produce 40,000 cars per week. So annualized, that would actually be 2,080,000 cars every single year. So they're expecting that by the end of this year, they're going to be able to use all that production capacity. And on the topic of production, they were also asked what their plans were for Cybertruck and where they were in their Cybertruck development. And as of right now, they didn't give us any super detailed information on it, but they did tell us that they're still expecting that Cybertruck production and deliveries are set for mid-2023. So it seems like we're still on pace as far as what we had heard in the previous quarter's earnings call. So now to talk about something that's a little bit controversial, with Tesla selling 75% of its Bitcoin stake. Now on the earnings call, Elon Musk actually wanted to chime in and talk about why they sold 75% of their Bitcoin stake, and he actually made it known that the reason that they did this was it was actually at the time when the Shanghai Gigafactory was shut down, and due to uncertainty and just not knowing what was going on, they decided as a company it was a better idea to try and sell 75% of it and convert it into cash, so that way the company could be more well capitalized. And truthfully, I can't really blame him. And Elon Musk did mention that yes, they may rebuy some of their stake in Bitcoin again. And also, for any of you guys that were wondering, he did say no, they did not sell any of their Dogecoin, so they still have all their Dogecoin holdings. They only did sell their Bitcoin stake. So now talking a little bit more about the Shanghai shutdown and what actually went on with all that. I mean, the news outlets have been going crazy over this for the last couple of months, wondering how this was actually going to impact the report today, and we finally have the answers to this. Now, obviously, they let us know that the reason why some of their auto margins, as well as some of their cash flow was actually hindered because of the Shanghai shutdown. So now we do know that yes, their auto margins did wind up taking a little bit of a hit, as well as their gross margins in general for the overall company. And on top of this, if we did strip away the Bitcoin sale and look at cash flow, then cash flow would have been negative. So it did have people wondering what the heck happened with cash flow this quarter. Well, the truth is that they did let us know that the reason that cash flow was impacted was mainly by the Shanghai shutdown. So I do not think that we're going to have a cash flow problem going forward from here. I feel like this Shanghai shutdown, this once in a weird time type of event that happened this quarter, it impacted many things between its auto margins, its gross margins, as well as its cash flow. And I don't feel like it's something that's a lasting problem over at Tesla. I think this was just a one-off report, and they kind of confirmed that today in their actual earnings call. So after this, they had some more pretty interesting questions from analysts, one of which being some of the long-term constraints that they might have at being able to actually, achieve this 50% year-over-year growth on deliveries. Did they see anything in the coming future as far as materials or supply chain problems that would make it hard for them to actually achieve these goals? And in reply to this, they did say that the only two things that they really did see that could possibly constrain some of these goals were two things really: refined lithium, and on top of that, cathodes. Now, in terms of lithium, Elon did go on to say that there's plenty of lithium out there in the world. It's just a bit hard to actually refine, and that refining lithium is actually a very hard business and it's very hard to ramp. And he did actually encourage entrepreneurs that are looking for somewhere to actually go and make money. He said, yeah, anyone that's an entrepreneur, you should go and get into the lithium refining spaces. It's basically a license to print money. Now, going on, he did mention that they were actually working on both of these, constraints that they see possibly coming up, which is good to hear that they're already starting to work on these things, since really he doesn't see these becoming a problem for the next 3 or 4 years. He thinks that they have plenty of time between now and then to get these things sorted out, but they are working on them both directly and indirectly with their suppliers. So with their suppliers, they're actually working on trying to get more people into it, but then also they are talking about how they're working on cathodes in-house and how they are starting to kind of look a little bit more into this lithium refining business as well. And now for a really big one, guys. They touched on demand. They had one of the analysts actually ask them, are you guys seeing any slow in demand considering what's going on macroeconomic wise and seeing the consumer sentiment being kind of all over the place? Are you guys seeing any hurt in your demand over there at Tesla? Are people buying less of your vehicles today? And to this, they kind of gave some vague answers, but really when it came down to it, Elon came onto the call and basically said that we do not have a demand problem over at Tesla. Really, our problem that we have at Tesla is production. We need a ramp. We need to produce more of these vehicles. We have plenty of demand, and that can be seen on our website, which, obviously we've all been looking at that on their website, seeing that, yeah, you are backed out to sometimes a whole year to be able to get one of these cars if you ordered it today. But he did kind of beat around the bush a little bit when it actually came to sharing some of these daily sales metrics or something like that. But as far as what they kind of told us in the call, it sounds like nobody over there is really that worried about demand, which is a good thing considering that one of the reasons why I myself am investing in Tesla stock is because I've always felt like with them being so backlogged and with them having such a big insulation metric basically due to the high demand that they've had over the last few years and because of all the backlog, that even through a recession they could persist and continue to hit earnings estimates like we saw this quarter, so long as they can continue to ramp and produce the vehicles that are already ordered. Now, last thing I want to share with you guys before we actually jump into my end of year price target for Tesla is actually a little piece of information that I actually wind up using to try and estimate where I think Tesla could be at the end of the year, and that is their revenue per vehicle delivered. Obviously, over this last quarter, we've seen some price increases, so we were expecting this number to tick up, and sure as crap, it did tick up. So now our revenue per vehicle delivered sits at $57,331.32. Okay, so if you guys aren't already familiar with my model for how I evaluate Tesla, go ahead and take a look at actually my earnings call estimate video that I did before. I'll leave a card up in the corner so that way you guys can go and check it out. And in that video, I fully describe exactly my model for valuing Tesla stock. So that way I don't have to re-explain all that here. Just go check out that video and kind of learn it there, and then come hop back over here and you'll understand exactly how I'm valuating this company going forward. So now that we actually have these new numbers for Q2, we can start to estimate where we might come in as far as our total deliveries for 2022. And now we also have this information that they're trying to exit the year producing 40,000 vehicles per week. So in my opinion, in Q3, I expect that with where production is today, with where we are at, with seeing the Berlin and Austin factory around 1,000 cars per week, as well as knowing that our Fremont and Shanghai, they're operating right around 650 and 750,000 vehicles annualized. I expect Q3, we're going to come in with deliveries right around 375,000 deliveries. And with Q4, if we do actually wind up exiting the year the way they're expecting to, 475,000 deliveries, bringing our total 2022 vehicle deliveries to 1.414 million vehicles vehicles delivered. So based on that, if we go ahead and scroll down here, you guys can see my 12-month trailing EPS targets right here, as well as my actual price targets. And by the end of the year, I'm seeing Tesla at $11.74, guys, after the earnings results today, based on a revenue per vehicle of $57,331 per vehicle delivered. Anyway, guys, that sums up our Q2 earnings recap for Tesla stock, as well as my end of year price target for what I see Tesla getting to by the end of this year. If you did enjoy this video, please do me the favor of hitting that like button down below. And if you're not already subscribed, well, first off, what are you doing? But make sure you hit that subscribe button down below, and that way you can catch me for every single episode that I put here on the channel. So until next video, guys, peace.